What bookkeeping should you be doing when you have 1 to 3 properties in your property portfolio? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. What bookkeeping should you be keeping when you have a portfolio of 1 to 3 properties? Well, it's a question I get asked regularly, and there's actually no right and there's no wrong answer when it comes to this question. So what we're going to really discuss today is some of the options that are probably available to you and things that may or may not work for you, so you can decide what's going to work for your business and how you want to run things. And it also depends whether you're just doing things yourself or using an agent, so you have to pass information on to somebody else. So as you can see, a few different ideas and options to consider. So let's go into a few of the ideas, a few of the options available to you. So at least you've got an idea what you could be doing, what you might want to be doing, and if you are using an agent, what you probably need to be doing as a bare minimum to enable them to be achieving what they need to achieve for you. So there is potentially no difference between whether you do it in your own name or in a limited company. However, I would say a limited company, you may need to do a little more than what you're doing if it is in your own name. The bookkeeping requirements are slightly less for those who are doing things in their own name because you're not trying to pull together a full set of accounts. Rental accounts can be as simple as they need to be, whereas a limited company set of accounts, they have requirements, they have accounting standards to follow, and there are certain disclosures that need to be put into a set of accounts. Check out the channel for what the accounts look like so you can actually see what a small company and what a micro company set of accounts looks like for what your accountant is probably going to be putting together for you. For rental accounts, check out the video on rental accounts that will give you an idea of how to pull some together if you're looking at doing it yourself or even pulling it together for your accountant. But before we dive into those, let's have a look at the most simplest option available to us, which may seem not like an option if we're talking about bookkeeping, but we should always cover every eventuality. And the first eventuality is basically doing nothing. I say doing nothing, but I say it with a pinch of salt, because when I say doing nothing, what I really mean is you do have a separate bank account, which is the bank account for all your properties. So everything goes into it, everything goes out of it relating to your property. So that's your rental income goes in, your mortgage goes out, your gas certificate, if you have managing agents, all those sorts of fees and everything, they're all incorporated into that bank account. So in essence, you're not going to do anything additional to making sure everything goes through that bank account, because by putting everything through that bank account, at least everything is in one place. So when you come to have to collate everything for your tax return, or if you have to do something to send to your accountant, you can literally send them a copy of the bank statements and rental statements if you're using a managing agent to your accountant, and they should have all the information that they need. Now, if you've only got one property, that's probably maybe not the best option, but it's definitely an option because it's probably relatively simple. You can see the rent coming in, can see the mortgage going out, it's only one property, it's very easy to follow through. And even with a limited company, if that is literally the only transactions happening in your company, you may be able to get away with just doing that little and making sure everything's going through that bank account. Maybe have your rental statements if you are using a managing agent, because that'll just tell you or whoever's working on your information what the deductions are, so repairs, maintenance, management fees, if they're paying ground rents or anything like that, that will make sure it covers all the bases. When you start having 2 or 3 properties in there, it depends how simple or complex things are. If you have 3 HMOs, for example, there's probably going to be more than one transaction per property going through your bank account. You may be needing a little more from a bookkeeping standpoint. if you've only got 3 buy-to-let properties where 3 lots of rent goes in, gross, 3 lots of mortgages go out, and you have insurance and a few repairs and your ICO and some of those expenses, then on that basis, maybe you don't need anything else. Now, the next step that I would probably say that we've got as the option is to go into something like Spreadsheet or Numbers, depending what sort of spreadsheet sort of system you are using. So you might be an Excel person, you might be a Numbers, you might be whatever Google's version is. There's a whole host of options, but some sort of spreadsheet summary. Now, in terms of a spreadsheet summary, there's a couple of different options. You could have a tab per property, and then that allows you to keep track of what's happening per property. You could have one page which has separate columns which cover the income and expenses for each property, which means you can kind of track what's on your bank statement. You can track if you pay for anything privately and make a note that you paid this on the credit card or you paid this cash. So you just keep track of everything that way. Now, for you, that might make it a lot simpler when you come to do your tax return, because you've got the totals, total income, total expenses, total interest, and all those sorts of things. So when you do come to do your tax return, or you send it to your advisor, it's all in the right place, and you can kind of see how the numbers have come together to see if there's any oddities, to see if there's anything missing potentially. So that is a really great way, especially with 1 to 3 properties, because ultimately you can actually see what's happening. If you see a bank statement, you've still got to go through and add it all the way up. So that way you've got that summary all together already. Now, I would say that's a lot better than just leaving it in your bank statement. And for me personally, I would suggest that that is probably the minimum you ought to be doing. The one benefit of that approach is obviously most of those softwares are free, or it's included in what you may already be paying for. So if you've got Excel, there's no additional charges for using that. If you've got Google Numbers or whatever it's called, that again, you've probably got that within your storage or whatever facility, or you've got your Apple Numbers sort of thing, again, already included. There's no extra fees, which is the ideal situation, especially when you don't really want to be incurring lots of additional fees. Now, the next step is going on to software. Now, we use a variety of software and there is a lot out there. So what I mentioned today are just a couple of the options. You may have found the right option for you, but I'm just going to mention a few today to give you an idea of those that are out there. Now, one we work with for our property clients is one called Hammock, and that one is great from it helps you as a landlord manage the property, so you can keep track of your tenancies, mortgage products, you can keep track of your gas certificates, electrical certificates, and it will give you reminders, as well as do the finance side of things. So link your bank up so you can match the transactions to the relevant properties, the relevant tenants, to keep track of whether they're paying in arrears or whether everything's up to date. So from that point of view, that software works beautifully, and it also gives you the reports available so you can see all the summaries, all the totals. So when you get to the end of the year, hopefully it's a matter of pulling the reports off, giving them to your accountant, or for you to have a look at to put onto your tax return. So that is one option. We also work with things like QuickBooks and Xero, which are more bookkeeping software, which is kind of the more technical ones. Both of those are relatively user-friendly for those that are non-accountants, and again, they can both put their bank feeds on, and they've both got things like classifications where you can put all your properties on, so every time you put a transaction in, you can allocate it to a property. The wonderful things about these softwares is that when you allocate it to a property, it does mean you can get reports to show how is that property performing. And that's amazing, because it means you can actually get some real insight into what is happening. So which properties are more profitable, which properties have more repairs going on. Now, the reason I don't always suggest these straight away is because obviously with all of these options, there is more cost to it. And in there being more cost, with 1 to 3 properties, you're possibly going, I don't want to incur additional costs. So are these a necessity? No, they're not a necessity. You don't have to have these at this point in time. However, they're just options available, especially if you're looking at expanding or growing quite quickly. So if you've only got 1 or 2 now, but you're looking at getting to 10, 15, by the time you're getting to 4 to 5, I would definitely be suggesting you're getting something in place. Because by the time you get to 10 to 15, you won't necessarily know which ones are costing you more money or which ones are more profitable, because unfortunately all the numbers do start to go into each other a little bit, especially if all the rents are the same amount, because it's like, how much am I getting on this one? Oh, they're all the same. But you may not know exactly what all the mortgages are exactly to the penny, and what all the repairs are, and all the different expenses on top of that. So these reports are amazing. However, we need to consider there's a cost to getting that information, and is that beneficial to you at this point in time? Those growing quickly, you might say yes. Those that are taking a steadier pace, and it's maybe 1 a year, you might go, actually, until we're about 4 or 5 years in, we probably don't need something like this. The final point, therefore, to mention on our video today is talking about making tax digital, because this will have an impact on what we need to do. So my initial comment of we don't need to do anything is true at this moment in time. And it's probably going to be true for a little while to come, because at this point in time, making tax digital is coming in for those over 50,000 in April 2026. For those over 30,000 is going to be in April 2027. And then after that, we don't know about anything below 30,000, but those under 10,000, they can probably still do nothing if they've only got 1 property. Still advisable in a separate bank account so it keeps it separated, but you're probably okay. The ones between 10 and 30, we're likely to have to do something. We just don't know what exactly yet. So there may also be an argument, if you have rental income that is going over the 10,000, you may want to start doing some sort of summary, because at some point you are going to have to be doing something, probably from a making tax digital point of view. And if you're doing some sort of spreadsheet or digital records, there will be some sort of bridging software that will enable that data to be transferred across to HMRC. Going forward, as you get more properties, then software is probably the answer, and making tax digital will be compliant with those softwares. Quite a few of them are already compliant. The others, they're obviously working on the background side of things to make sure that it is compliant with making tax digital. We've had a few changes recently with what they're doing, so obviously the software houses are just getting everything in place and making sure that it is all working as it should do. Obviously, over the next couple of years, as things kick off with making tax digital, we will have more information to ensure that we know what needs to be done. So in summary, we've got the option of doing nothing, although when I say nothing, I do still mean have a separate bank account, whether it be in your limited company and you need a limited company bank account, or whether it's in your own name, you probably just need a separate current or savings account or something that everything goes into. Our second option is obviously our spreadsheet option, whatever format of spreadsheet you're doing. And there's many different options you can do with the spreadsheet. Check out the video on the bookkeeping on the channel to give you an idea of what you can do with the spreadsheet to collate that data into hopefully a usable format for you, as well as just keeping track of everything. And finally, there is the option of software. However, I do acknowledge that there is a cost to that software. So this may be something, as you're getting to 3 or 4 properties, that it becomes a viable option, and it doesn't seem to be a cost like it potentially would be when you may only have 1 property. Hopefully today you've got an idea of what probably is going to be the best thing for you and your property portfolio based on having just a few properties. Hopefully this gives you an idea of what is going to work for you, work for your accountant, and give you the best information available. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. less taxes.